All right, so we're going to get started here in just a minute. I'm going to take a look and review a handful of different stocks here for you guys, and we'll check things out. So welcome to another live stream. We're going to check out some popular names. I'm going to take a look at Facebook, Apple, Netflix, Nvidia, AMD, Tesla, Twitter, Microsoft, Amazon, AMC, and GME. So these are some of the popular ones that we have. And those are kind of the ones that we'll take a look at. If you have any other suggestions, feel free to throw them in the chat. We'll have kind of like a live chat here going, and then we'll go from there. So just experimenting with a few different live stream stuff, and then we're going to get going. All right, so I've got things set up. I've got my monitor set up. Typically, for those of you that don't know, I use TC2000 as the trading platform. And then I use Thinkorswim as the brokerage platform. So for the option side, I'm always on the Thinkorswim. For the charts, I always use the TC2000. It seems to work out really well. And it's just more personal preference. Could you use TradingView? Sure. Could you use bar chart? Sure. Could you use stock charts? Sure. They're all fine platforms. It's just a question of which one you like better. I just find the Thinkorswim platform for the charts, it just doesn't work out as well. So the market right now, as we take a look, just to give you a little insight and update from the S&P perspective, we're down about 74 points. So it's pretty heavy. The sell-off continues to intensify, and it's pretty nasty out there when you look at a lot of the individual names, and it's been building for a little while. Some of these names have been pulling back quite a bit even beforehand. So those are some of the ones that maybe you could take a look at getting into. Again, for me personally, this is just my own personal opinions and thoughts. It's not any recommendations for you guys to do anything. It's just you have to make your own decisions and due diligence. But there are some names that could be interesting as we continue into the sell-off, but I would probably say more into the mix of maybe next week rather than this week. I think just with a lot of the damage that's been going on and happening right now, it may continue into next week. All right, so let's get started. We're going to go in. I'm gonna get started here and check things out and take a look at some of these stocks. So we're gonna start out with Facebook. And I'm going to go in and just do a little bit of some drawing for you guys. So a lot of the things that I would look at, especially when things intensify, I would much more look at things that are, let's say, on a more of a 2-day, 3-day, weekly, or monthly time frame. The monthly time frame is going to be tough to read because as you're trading into like this day into the month, right? It's just a new month. So that bar doesn't have as much significance. And here it's tough to really look at the pattern. So on a monthly time frame, it gives you a good idea of the A, B, C, D pattern that we've concluded, let's say on Facebook, and now we're going kind of this way. So it's giving you a good insight there. But you know that once that pattern's complete, then probably something new is going to happen. So that's what was going on here. We got A to B, B to C, C to D. So there's our pattern, and now we've kind of completed there. So a lot of people in these time frames, they're like, oh man, I don't want to sit this one out anymore. But that's the thing, is that at that point, that was the time to sit out and wait and see, and because stocks at that point pause, they do something different. So as we get back into the weekly time frame now, you can see that pattern evolving. The same thing, A to B, B to C. B to C here is more sideways, and C to D. And then again, we went up, there's your break. On that upside, we couldn't continue this angle. So again, whatever this angle is, let's just call it 30 degrees. We couldn't continue, it broke, and now we've got that another pattern. So let's go into a little bit more like a 2-day pattern. So here Facebook now is on the downward swing. So as we check this out, again, here's our A to B, B to C, C to D pattern. Where will the C to D end? So if we look at it now as a bearish pattern, you take the measured move of A to B, okay, that measured move is going to be the C to D. Okay, roughly. It's not exactly, but roughly. So how do you calculate this? Where's the highs? Okay, the highs here, I'm going to look 384.33. Okay, 384.33. How about this high? 383. So this is the highs, 384.33, and I take it to the lows over here. So roughly speaking, it's about 76 points, let's just say. So I'll take the highs here, and I'll go down 76 points. So where can we end? Okay, 76 points, roughly, it's right around the 280 level. And take a look at where the 280 level is going to be. The 280 is going to bring us in to right around here. and that'll be our kind of a range for where this stock can get into. Now, it doesn't mean that we can't go a couple of up days here to retest it and then pull back further. So a lot of people say, well, can it just do that right now, right away? Yeah, it could. But usually stocks don't go straight down, they don't go straight up. So the same thing like we had the other day, we had a nice big up day, and then, and then we have another flush day. So same thing here, we could go down a couple days, go up, and then roll back over. But in general, what you're looking for now for a completed ABCD pattern right here, as you look into this, the completed move is going to be right around 280. Could it hit 290, 295 and kind of stop? Sure, it could. It could do anything. But that's kind of what you're looking at, okay? So from a Facebook perspective, if I look at it on the daily, we're already breaking this level of 310. That's weakness, more bearish volume coming in, selling pressure, people are panicking. The earlier entry right there, so there's a couple of breaks right there happening. So we will see what happens here, but you could come back up and easily sell back off further. So that's why this sell-off is a little bit stronger than kind of normal. All right, let's check out Apple here. Apple had me convinced that it was actually going to go higher for a little while. So here was the breakout. We were going sideways for a little while. And then again, you had another leg higher, so a bit extended. So this thing was extended even further. And then you got back under it. So the minute it got back under this, I was out. I actually had some long shares in Apple, actually more selling put verticals against it. So when it broke this is when I kind of sold a lot of put verticals in this area. And then took some profits over here as it continued to move higher. And once it got back under there, I saw, just markets acting weak. I got out of it. So anyways, as we take a look at this right now, I'd still say this is a fairly bullish stock just because of the nice breakout that it's had, but it could easily come back here and retest. That's, I'm saying, kind of at the lower end for the time being. For the short term, but it could also just come back here at 155 or so, because this is kind of that level where we have previous highs here. So this is what I'm looking at, is these different levels, and more so this one because we've had some nice bullish volume here. So this one's been holding up pretty well, right? It's a love stock. People love this thing. Okay, let's take a look at Netflix here and FLX, and you can see a lot of damage is done. So here's a cool little storyline for you guys. Okay, so here's a little rabbit, hops over here, we consolidate a bit, hops over here, we consolidate. So notice every time we do a little hop, this is the way this pattern's been going. So this is known as a stair-step pattern. Okay, so as we move in the stair-step pattern fashion, that stair-step now got broken. So here was our break and there's our issue. Okay, so now as we broke this level, where could we go? Well, we've got a couple levels that we've already broke once, we broke twice, now we're getting into this level. So this is kind of your level of support that you're watching. So watch for this level right here, and that level is going to be the previous support of about 575, give or take 3 to 5 points, because it's not going to go exact. And if you look at that, why is that such a critical level? We've had a lot of sideways consolidation action right here, and that's why that level is pretty significant. So watch that level to see if it can bounce. That could be a stepping stone for when you get more into it, but also check this volume. Right now we've got some selling pressure, but that could be a place where you nibble, right? Nibble meaning if you normally trade, let's say 100 shares, you might say, hey, I'll pick up 20 shares there, okay? So that's kind of what I'd be looking at. All right, let's check out Nvidia. Very similar concept here. This one's a little explosive, right? So we got this explosive move, a little bit of sideways action. That sideways creating a little bit of a rounding. Here it is, breaking down. So again, I'd watch a few of these levels. The problem here is you got a gap over here, okay, and pretty explosive move over here. So there's a tiny gap there, nothing too crazy, but it's just extended, right? So if you look at just the average, it's just extended. So that's where that pullback, I'd watch around that level of 287, 290, and that could be a little bit of a better play for the stock to kind of hold those levels. Okay, AMD. Okay, so AMD, another one that's been doing fairly well, been moving along right here. You could see there's the breakdown. Had a little bit of a toppy action at around 160 right here, breakdown. So this is the break. Okay, so now we're pulling back. This blue line right here could be a 140, a nice support level. So you could check this right there. There's one spot. The other spot is kind of at the tops of this level, so that's 130. So watch these two levels for some support, 140, 130. So it's kind of nice round numbers there for you. And if you're really looking at it from a Fibonacci level standpoint, look at the earlier breakouts to the highs here, a pullback of 61%, 61.8 will bring you right back to this level, which is 124.80. So this could be a fairly nice pullback and a good buying opportunity at that level, but it's still got a little while to go, so we don't know. I mean, it's already down eight bucks, so that's quite a bit from a technical perspective. All right, another one let's take a look at is Tesla. I know a lot of people like this one. One of the big things here, this one skyrocketed fairly quickly. You've got some lower highs that are being created, so check that out right there. You've got support right around that $1,000 range. So there's your support range. If it cannot hold here, this will be a problem. So you're watching for it to hold. It is coming in there with lighter volume, so that's good. But you do have a little bit of the gap there, and we'll see if we've got resistance and overhead problems over there. So there's your kind of triangle pattern. Before then, you were kind of doing a stair-step effect, and it's moved on pretty well. So there's that parabolic move. So you've got this triangle pattern. And typically these are continuation patterns. That's why you don't want to be too fearful. For a lot of people, those 70 point, 80 point pullback is a little fearful, but watch this $1,000 point level. If it holds here, this thing could actually explode higher, but for the time being, it is acting weak. So it does feel scary, but this is why I would watch this level right here and probably give it another 30 points below this, because these stocks will easily whip you down because the short sellers, and then it might snap up. But be careful. There's kind of that pattern you're watching. See if it'll snap down and then go up like that. You know, maybe here, go back up, snap down, and then rip. I don't know, something around that level. There's a gap there that could also be a little problem. If it can't hold there, obviously the stock then is toast, and you got a big extension there. So be very mindful. You are extended on this one, but the volume's not a huge selling pressure like many of the other stocks. So it's something that's much more favorable than a lot of the other ones. All right, Twitter, toast. I definitely say it's definitely toast. If I look at this on the monthly chart and you look at the bigger picture, here is your downward lower highs. You've got problems. Here's your support. There's the breakdown again. And here's support right around $27 price is probably a good value if you're kind of looking at it that way. But if you check this stock out, you're accelerating and picking up speed here on the bearish volume side, and you're breaking this critical line. Here was the resistance, and now that's support. So you're breaking that critical support line. It's starting to go. So now you've got some major support right here, and that's the level to watch. If you look at the weekly, I mean, you've got volume building right here. It doesn't look good. You know, this thing, you know, put some peanut butter jelly on it, it's toast. And if you look at the daily right here, it doesn't even look like it's turning around anytime soon. So here, a lot of issues. You know, comparing it to like something like Disney, where you're actually getting some sort of turnaround. I think even Snap was doing some form of, you know, like a few green bars and trying to hold. But, you know, Twitter, I mean, with the CEO and that kind of stuff, I mean, it's not even boasting anything yet. So we want to, this is going to probably continue going down until you start seeing that rounding bottom of some sort. So that's what I would keep an eye on something like this. Okay, let's check out Microsoft. Is a big boy. Good pullback for Microsoft. Very nice, very healthy. So, you know, you're taking out, like, from these highs to this, you're taking out about a full month's worth of gains in about, what, 5-7 days. So you got 7 days taking out a full month's worth of gains. So very healthy. I know it sucks if you're in it long term or something like that, or if you're in it for a dividend play. Yeah, man, it you know, took your portfolio, whatever. Let's say you had 100K, it took your portfolio down quite a bit. But the thing is now this is coming right into this nice sweet spot. It's going to be a wonderful opportunity later. So you have to look at it like this. So here's a little bit of a gap. Here's the support that you're kind of looking at, and there's that rounding top or resistance that you got going on. So this is where a lot of the greed happens, right? You're kind of breaking above this, a lot of greed, and then it's like, boom, it starts to roll over. Once that starts to roll over, it's a bit of an issue and problem. So anyway, the good thing about this one the volume here is contracting on the sell side, so you might get a bounce here around 320 because you've got a pretty significant sell-off today and over the last week actually. 310 is another one to watch, or right around that level, 305, 310. You know, it's not going to get in it perfect, but if you look at, you know, even a 2-3 day, that's kind of the next level of supports, right around that level, and that's a significant level. If it breaks below that, man, the market's going to be in much bigger doo-doo and trouble. Okay, Amazon, this one's getting back into its sideways range. It faked us out now twice, so I got 1, 2. So unfortunately, this thing is now not good, right? So you got 2 breakouts, 2 failed breakouts. Building cause, it's not looking good because you've got sideways action that's basically happened right here. Okay, so there's your sideways action, there's support, support. So 3,000, it might come back to retest the 3,000. If I'm playing the devil's advocate here and I look at, let's say, another level here, okay, this could be a support level, but man, it just seems too good to be true. Yes, the volume's slightly weaker. It just seems too good to be true where this is going to hold support and bounce. So that's why I don't think it's going to work out. So normally you're back into the sideways range. And then what you're looking at, here's my resistance, 3,500. It's a nice round number, very clean. Nice 3,000 number, nice support. So this thing could easily come back right down, which is about 300 to 400 points lower from here. That sounds pretty nasty. Okay, so what you want to do is watch for these leader companies. As I'm looking at these leading companies, watch to see how these leaders start behaving as they start turning around. Because if these leaders, if they start moving back up soon, because they'll usually go first, and then after the leaders go, then a lot of the other stocks will follow. So that's usually what happens. Okay, so here again, here's this chart, here's this viewpoint. Again, it's just my viewpoint, not recommending anything, just looking at, okay, where is it that we could bounce? You can see the selling pressure here on this one is not as bad or nasty right now compared to some of the other names. And here's, again, the daily. Now the daily, if you're looking at shorter term, and this is what I would look at is from a trading perspective, you do have some support levels at around, what is that, 3175. So 3175 to 3180, you have some support levels, and that could easily have a nice bounce, and that's where it could hold, is another good opportunity that you could check out, but be mindful how the market behaves here into those levels. So for the time being, I don't know if it's gonna keep running this way till that level, and then you've got this other level down here. So you've got 2 big levels to watch in this one. Other than that, in a big way, we are really sideways. This stock's been moving sideways, what, I think 2 years now. People say, oh, it's a big boy, it's a big company, but it's been moving sideways. The reality is from here to here, that's a 2-year sideways movement, okay, for Amazon stock. Okay, let's see, AMC, this is another big one that people like to trade. This one I think is toast. You've got this triangle pattern. This is the triangle pattern I was talking to you about on one of the earlier stocks. So if this, you know, like a Tesla thing, so if this same thing happens to Tesla, this is where the problem lies. So be careful here. It's not exactly the same thing, but take a look. It's here, the angle's too, there we go, works. So here I've got some resistance, 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 support, support, support. So here's our break, and that's the problem. And we're starting to break as the volume picks up. This is going to be nasty. So we're going to be, this stock could cut in half. It could be a $15 stock very soon. So don't buy into the hype and say, it's a buying opportunity. A lot of the people that'll say this is a buying opportunity are going to be the ones that are more like, you know, are long at the top maybe and trying to suck you in. So this may be a buying opportunity around 15 or 20, because that's what I would watch. Somewhere around those levels, because you've got some gaps here. So at those levels, right now, no, it's still at 25. You've got some big range where it can pull back into. So be mindful. You could cut easily, you know, from 30 go down to 15. So that's a significant drop from where it is. This thing is toast. If you look at the weekly, there it is. Here's the other little patterns for you. There's the triangle pattern. If you measure that move, there it is. And then there's that move. There's your two moves, A to B, B to C, and C to D pattern that we've talked about. So you should be able to see these in a lot of spots. And now if we go into the triangle pattern, I don't know, there we go, the angle. Sometimes the angle won't draw it because it's too close. And we're breaking, that's not a good sign. So you're watching now some of the highs and lows of those levels. So again, simple, keep it simple. The problem here is you've got this bearish volume building cause, and that's not good, okay? All right, we've got one last one here in GME, also trouble. So if you look at maybe a 3-day, weekly, a lot of people like these names. These are big names, bigly traded in a big way. So if you watch these patterns and so forth, it just shows you human behavior, the way that it's just moving, acting, behaving. So this one easily can get down into this 137 level. And that's kind of what you're looking at right here, because you've got resistance here overhead, trouble, sucked you in a little bit in there. So there's a little bit of a break and then rolls back over. So here's your support to some degree. If it breaks this, you got trouble. Like this thing could get into some $50 price level, which is a significant haircut. And it's because a lot of these were overbought and there's just a lot of retailers in them, so they can easily take you out very fast and quick. So anyway, I hope that helps, gives you some take and insight on these stocks and insight, just to show you some of the ones that I would keep an eye on. Here is Walmart. As boring as it sounds, there's Walmart. It's coming in right here, support around 135. It's trying to bounce. I don't know if it's going to hold, but it's one that you had a resistance over top right here, and it's trying to hold around 135. So that's kind of another one here for today. Daku is just toast, just to talk about a couple of quick ones for you guys. If you look at Shopify as well, breaking some critical lines. So watching probably around that level, which is, here's the support as well, about that 1300 level is kind of what you'd want to watch. So you got a lot of stocks there. I had some that had some alerts, like Peloton had some alerts that started to trigger, but it's still not there yet. So again, watching support around this level, maybe, but sometimes these take 3 to 6 weeks to build and digest, to kind of start turning it around, 3 to 6 weeks, and then the breakout. So wait for these things. Disney, the same thing. I'm getting some alerts here and there, but they're minor. They're like, okay, check on it, signals, where I got like this bar versus the rest of the market, and it's starting to go sideways a little more, but versus the rest of the market is just tanking. So these are some signals here and there that are showing up, but it's not anything significant. Even Zillow here, I've got some signals that are starting to kind of, start rolling this way, but it's still not ready. The volume's coming in, but I still don't think it's ready because the market's acting weak. You could try a little bit, nibble here and there, but I'd just be mindful. Anyway, that's it for me for today. So I hope you enjoyed the video. Hope you guys got something out of it and just checking out some charts. Again, thanks a lot for joining me. I'm just trying to do some recaps for you guys for some technical stuff. Nothing too big right now as far as, I guess you could say, complexity goes, but we'll try and get a little bit deeper into some of the stuff with maybe some evening sessions in the future and so on. But for now, just watch out. This market could get more aggressive because right now we got extended from the mean over here, and what could happen is we could get extended on the sell side. So this is extended on the sell side, this is extended on the buy side. So we got extended on the buy side, but what could turn into is now we're at equilibrium. We're at a balanced state. We're going to be in a balanced state soon, okay? But what can happen is we can get extended on the selling state. And when that happens, you probably haven't seen it too often, but it does happen on certain, like if you watch certain stocks, what they do is they'll get extended on the other end. So here is Snow, for example. So what you'll see is right here, you get way above it, and then you'll get way below it. Let me switch it to another. Here's Keltner channels for you guys. So you could see right here, if this is the average, this yellow line, and we pull back too far extended, it comes in. Too far on the sell side, it tries to pull back. Too far, it tries to pull back. But that's what I'm talking about. Right now, you could be in danger of going here, because what we did for the time being is we got extended and we're pulling back into that level right here to create that equilibrium. Or if you look at, let's say, MasterCard, what's happening is right here we got extended and now we're pulling back here, but what it could happen is you keep going and you get to an extension point. Okay, so again, you get too far extended right here to the upside, you go back to even, it might hang out, but then you get extended too far to the sell side. So there's the sell side, there's the buy side. So be very careful here on this one. If we look at the spiders, just on the extension, we're starting to, we were extended on the buy side, we're back kind of even a little bit, and now we're getting extended on the sell side. So we could get further and further along that way. And that could be a line of concern. So this can easily get into certain levels. If you check Bollinger Bands, we're kind of hitting those levels at the upper end. And what is that, 2.5 standard deviations. So they could still go up to about 3. So, next week could still have some selling pressure. But you're due for at least a shorter term bounce. It's kind of the same thing that you saw when you get a major sell-off like this. You get a pullback or a retracement like that, and that would be your time to kind of get out of some positions if you missed it. So if you get a nice bar right like that and you're kind of worried right now, it might be wise to wait for a nice green day and then, before you get the next rollover effect. All right, thanks for joining me. Enjoy the rest of the weekend ahead, and I will see you next time. All right, take care.